Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading, with your weekly Edge show for Saturday, December 3rd. Today, we're going to take a look at the markets, see where did we close this fairly eventful week, and then beyond, take a look at some sector rotation and industry group rotation that is shaping up as we move further into year-end activity here. Also, some of the headline news that really drove stocks to bounce quite a bit this week, and viewer question of the week. And that question is all about how you can capitalize on stocks after they've had these big gaps up, these big moves after reporting earnings. So let's take a look at some of those news from last week. First up, the most impactful was the possible slowdown in large rate hikes by the Federal Reserve, which was announced on Wednesday in Federal Reserve's Chair Powell's comments from a speech, and that was very well received. It also confirmed what was revealed the prior week when the FOMC meeting notes confirmed a similar outlook among other Federal Reserve officials who were thinking that 0.75% increase at every meeting would be too much for the markets to handle. From there, we did also receive information relating to consumer confidence, which is falling due to high inflation, and then private job growth slowed down. We're in that period where weak economic numbers are good for the markets because it helps pave the way for a lower rate hike standard. We also got GDP numbers that showed the economy is still growing. However, Chicago factory activity contracted. So a little bit mixed there. However, PCE numbers came in and they were lighter than expected. This is a very closely watched number by the Federal Reserve, as the core PCE number provides critical inflation data. It strips out the volatile energy and food numbers, and it did come in less than expected. So that was good news, not dramatically impacting the markets, but certainly in the background. Today, on Friday, November unemployment report came in stronger than expected, and that did impact the markets. We did open Friday with a pullback. However, we saw a pretty decent rally into the close. So from here, we're going to take a look at where we closed the week with the broader markets. So let's go ahead and take a look. Here we are with a daily price chart of the S&P 500. A couple of things that I want to point out to you is this Wednesday move following Fed Chair Powell's comments. And you can see that it had the markets really rallying on the day. The index broke back above this 200-day simple moving average, nice high volume, indicating that the markets were under accumulation. Your outside momentum indicators, that would be the RSI up here, in positive territory above 50, and also your faster moving stochastics trending upwards. So the upside momentum is in place. We were able to close today back above that 200-day simple moving average. And this is what we ideally would want to see, a continuation rally with moves remaining above this key area of now support. So from here, let's take a look behind the markets, and we can look at the 11 underlying sectors within the S&P 500. This is a 2-month daily price chart view. I've gone ahead and added this relative strength indicator. You want to be aware of where the current strength is in the markets so that you can participate. And then equally important is staying on top of rotation. You'll see certain areas and groups remaining up here at the forefront, showing superior relative outperformance, and then weaker areas down here, which you're on the lookout for as it relates to rotation, is a move of these weaker areas up to the forefront. Likewise, you want to stay on top of those stronger areas as they potentially move into the weaker spot. So I'm going to start here with energy because this particular sector was at the forefront for quite some time throughout October into the beginning of November. More recently, you can see that it is languishing down in that lower quartile As this group comes under distribution, we can see momentum trending downward, this RSI poised to trade below that 50. And then we had this MACD crossover. That black line down through the red is your first signal that this strong uptrend has shifted, in this case, into this sideways price action, but generally not positive. So that was a rotation that we've been covering here over the last several weeks. But let's take a look at the strongest area, and this is one that we've talked about here recently as well. This is the healthcare sector, XLV. You can see it's been in a very strong uptrend here. Momentum up here in positive territory, heading higher. A couple of factors here relating to why this group is up here in this upper quartile. We are poised to break out of a nice 7-month base, and a lot of it having to do with these large cap pharmaceutical companies that are announcing new drugs in their pipeline that are moving through potential FDA approval, and then also a lot of merger activity taking shape as well. The other area I will share in this next segment that is helping to push healthcare higher, and we can take a look at that in that next area. Also up here at the forefront are consumer staples, another area in a very sharp uptrend, very similar concept where these larger cap safer haven stocks are being favored during this market period simply because the fear of recession is strong. So there is a movement into these names. Also, they offer a nice high yield, which is attractive as a potential buffer. A lot of these staples companies, in addition to those large pharmas, are also projecting higher growth numbers. They come out with very strong earnings, and those companies that have been able to increase their pricing during this inflationary period are faring the best. So as we move forward, I want to share another area that has been progressing up to this forefront, and that is XLB. This is the materials sector. I'll get into one of the reasons that this particular area is moving higher, as well as share a stock. But we can see it had a very nice week this week, remaining in this uptrend with its outside momentum indicators in positive territory and heading higher. So from here, when we look at some of these other areas that are languishing, we would be remiss not to take a quick look here at technology, because it was one of the strongest, it was the strongest sector on Wednesday after Fed Chair Powell's remarks. So we are moving a little bit closer to a potential break back above this 200-day simple moving average, which would be constructive for this group. And I will share with you some underlying areas within technology that can be drivers, but also of note is the fact with XLK and some of the other industry groupings is the fact that the mega cap FANG stocks really outperformed last week. In technology, however, there was not that outperformance, as Apple was flat for the week. Microsoft up 3%, very decent. These two comprise over 40% of the tech sector, but the other mega cap names really moved quite a bit higher. So in other words, this technology group had a decent move for the week. It was up in line with the S&P 500, and it was without the help of those mega cap areas. So from here, we want to take a look beyond these sectors and review some of the underlying areas within these sectors. Again, all about embracing and getting a very close look at rotation that's taking place, and then also being aware of where that strength is in the broader market so that you can participate and take advantage of it, really. So here we are with these ETFs that I use to really stay on top of the markets. And up here at the forefront, number one is another reason why healthcare stocks are faring well. This is IBB, the biotechnology ETF. Subscribers to my MEM Edge report know that we picked up on it here at the end of October, and it had a super strong uptrend, pulled back very orderly to this 21-day simple moving average, and has been reawakened this week with a nice 3-week base breakout. So that's another area that we've been favoring, and I have several stocks on my suggested holdings list from there. We talked about basic materials and some of these metals stocks. So up here in the forefront as an outperformer is GLD, the Gold Shares ETF. You can see we had that gap up on Thursday. We were unable to have a follow-through rally back above this 200-day simple moving average, but certainly your momentum is in positive territory here for gold. Just a quick look here also at silver, another area that was even stronger. This is SLV, the Silver Trust ETF, in a very confirmed uptrend. From here, let's take a look at some of these other areas that are up here at the forefront relative to the weaker areas. I did want to also, when talking about materials, highlight the fact that the US dollar is continuing to decline. We did see a drop this week again, and a decrease in the US dollar is quite positive for these metals and other areas of commodity. So as we move forward, one other area that was in a declining mode again this week is Brent crude oil. I talked about energy stocks being the weakest among those bigger sectors, and this is one of the reasons. Crude oil is now down here at the 85 level after spending most of this year above that 100 level in price. So that is one of the reasons we're seeing energy stocks languish. Also, I mentioned about technology outperforming without those mega cap names. Let's take a look at two areas that are really impactful within tech, and that is semiconductor stocks. Big rally on that Fed Chair Powell news on Wednesday, but again, unable to follow through. It's been a very choppy area here for semis as earnings results are mixed. So we're on the lookout for a potential reversal of this downtrend with a break above that 200. We're not quite there yet. And then another area of technology is software. IGV is the tech software ETF, and it was up 2% relative to the S&P that was up a little over 1%. So we are seeing movement here. A lot of the names that are rallying are beaten down stocks where management is coming out with decent earnings, but more importantly, guiding their growth estimates higher. So we are seeing vibrancy there, but it's not quite ready for prime time yet as it relates to that broader market indice. So also we do want to take a look at the yield on the 10-year, and this is TNX, and we can see that interest rates did decline last week. They're continuing to decline. This is a positive backdrop for the markets as they fare better in a lowering or a declining interest rate environment. So that's our look at the broader markets for today. From here, I did mention our viewer question of the week, and it's all about taking advantage or what one may consider doing after you see these big gaps up on earnings that we've been seeing throughout last week and even much earlier in the earnings season as well. So I'm going to share with you a stock that had a gap up into a base breakout earlier this month, and it was on earnings. You want to have that driver where the company is reporting strong growth, management is guiding their growth estimates higher due to high demand for their products. So this is Air Products and Chemicals. APD is the ticker symbol, and we'll use this as a guide for what to be on the lookout for. So again, the beginning of November, we had this gap up here following the release of their earnings, which in turn pushed the stock out of a base. This can be one of the strongest chart patterns when you see it. Oftentimes people will think naturally after 2 days of very strong rally that you may have missed the move, but let's take a look at the reality as it relates to this, and I will share another example with you as well. So this gap up into a base breakout pushed that momentum into an upward trajectory, and then this is your MACD, moving average convergence divergence, had just entered into positive territory and now heading up north. So in essence, this gap up into a base breakout on strong earnings pushed APD into a very strong uptrend. And this is not uncommon. It's something that I point out regularly, particularly during earnings season. You will need that backdrop, certainly whether it is strong earnings or an announcement from management that's going to drive those growth prospects higher. So from here, I will share another stock with you that had a similar experience this week. And that is Build-A-Bear, BBW. It's a smaller retailer, both online and brick and mortar. And let's take a look at what happened on Wednesday of this week. The company did report strong earnings above estimates. Management guided their growth higher, and apparently their online sales in particular improved dramatically. So what I do want to point out to you is that similar dynamic with APD, where the news pushed the stock up. It was up over 10% on the day, and it gapped up into this base breakout, and it took place on big volume. Not sure if I mentioned that, but that's another key component. And then from there, we can see how it thrusts this MACD into a very strong uptrend. And then from there, your already positive RSI trended higher, also pushing BBW into an uptrend. And from here, you can also take a look at an intraday chart of these stocks. If you are watching the markets before the open, you know that this company came out with strong numbers and you want to participate. Let's take a look. This view is a 15-minute. I'm going to take us out to a 1-hour price chart, and we can see that gap up on the news, if you bear with me. And here we are on that 1-hour price chart. You can see this is the gap up. Big volume as it continues to advance, with this third bar beyond that first bar, closing the day above the high of that first bar, is statistically quite constructive. And you can see from there that the stock did enter into a continuation rally, remaining above this 5-hour simple moving average. Also with this move, we had that nice black line up through the red, indicating a new uptrend. And into the close today, Friday, you can see that the MACD is trending downward, but we remain above these moving averages, so you're still in positive territory here. The key in noting when this uptrend would potentially be ending is going to be if you see the RSI turn negative. That could be one indication. And then as well, if the stock's price breaks below these moving averages. So far, we remain in good standing here with this particular stock. We are not over yet with earnings season. We still have some companies due out report next week. That's it for today. Everyone have a fantastic weekend. I'm going to look for you again here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.